British bonds today, and you can see that that storyline's still acting at higher prices. That's even more bullish bonds than it was before. So you can see bonds have had a very, very easy journey from 5s back up to 12s again for anybody that's keeping an eye on those tips markets. And they've been very, very powerful today, haven't they, on the tips? Well, not just on the tips markets, guys, but the absolutes have taken off like an absolute rocket ship. Absolute rocket ship, guys. So if you didn't buy that, you're going to miss out, guys. Seriously, you've got to be in this, right? Can I assume everybody is in it? Can I assume, Reeve, you've got that trade on? I'm assuming all the bond traders certainly know what's going on here. I'm pretty sure everybody knows this as a very, very, very bullish bond trade. And we're back at the top edge. It's another profit take opportunity to take a bit of money, but I'm not going to take that much, guys, because this could rocket ship to this could rocket ship up to the prior swing highs the way it's going at the moment, guys. This is amazingly good. This is amazingly good at the present moment. You can see the blue line is trailing the orange line. So that's still giving us a lot of curve information in the background. If the blue line's trailing the orange line, that's still bullish bonds. So that's what's happening just now. That's what's happening just now. That's still bullish bonds. So we're happy with that outcome. It's a bad time of the day. We've already seen most of what we need to see from this trade. In addition to which, equities have just ran the previous day lows, which is a great liquidity level, of course, back down into 43.50s. And you can see we never ever got back above the bullish threshold, which was the 44 handle at the top edge. So we never ever got back above the 44 handle, top edge, bullish threshold. So it kind of keeps that sell pressure into the markets. But I still love the shape of the volatilities today. And I've been watching the Warren rotations, and whilst they've been bearish, they've recently been buying back into these low prints again for this lower price. The only thing that I've been concerned about still is the quality spread. The quality spread still looks very, very sell side at the moment, guys. And for that reason, I am a very, very, very passive buyer of lower price equities. I'm not going to get too strangled by this bit of business, that's for sure. But I do like this trade. I'm happy with how they're doing it. I'm happy with the shape that they're taking the trade in, and if that's how they want to play it, end the month. You know, if you're a good enough trader, that's actually quite good for you because you're getting plenty of opportunities to do some business. And if it catches, you'll make a lot of money this afternoon, this evening. If it doesn't catch, okay, doesn't catch. It is what it is. It is, as they say, what it is. Now, obviously, at the moment we've got this type of environment where we've got a QT environment just now, haven't we? Because bonds have gone slightly higher, and it's pushed the yield down a little bit, but it's not been a huge amount. You can see that bonds aren't exactly scalping off top edges today, and at the same time, neither are equities scalping off top edges either. So it's got a kind of tightening feel about the markets today, hasn't it? A little tightening feel just now. So we're not really getting any kind of evidence that this is something that we want to do much about in terms of yields and in terms of anything else. But oil's done well. Oil's came off the bottom edges. We talked about oil in relation to the crack spreads. I'll touch on that again this afternoon, just so that everybody we can just run that as a very, very separate little standalone classroom, since it was a question that was asked.